Good morning, everybody. Good morning. Good to see y'all. Another wonderful day. Tuesday. Let's see what Tuesday brings. Good morning, Chris, Greasy, Rich, Corey, Shadow, David, Greasy again. Good morning, Max. How are y'all doing this morning? All right, so real quick, I want to point out I have these daily sell side liquidity areas here and even lower that I'm watching. 242.75, 019.75. These are areas, huge areas here, huge key levels. Let's go through it. Starting on the daily, as always. Look yesterday how this candle opened yesterday right below the midpoint of that fair value gap. Then we had our open, high, low, and close. We inverted this daily fair value gap that I had here. So I'm leaving that there because if price does go up, I want to see if it stays in the lower half of it. And then where am I getting that sell side liquidity? Right here. All these relatively equal lows here. Very clean, very smooth. So price should take that at some point. Then you have this here as well. And then below that, we have these fair value gaps that I went ahead and marked to see if we do, through the rest of the week or next week, whenever, do keep going down, then these are levels. Just got to mark them. Little volume imbalance right there. And then you have this low down here, which I have not marked yet. But once we start crossing through these, and this is why I said last week that I'm looking at in the 17,000s is not crazy. It is not crazy. To some people, it might be crazy, but to me, it is not crazy. Obviously, this will take a little while, and you can have a pullback, in this and all that. But this is where I'm looking at for today. I'm looking at these levels as key levels here. All right, so drop down to the 15 minute. 15 minute. And here on the 15 minute, we have all this smoothness up here. I'm looking at this as buy side liquidity. We have some London high as well right there. See, now I marked this here. This is going to be our minor sell side, or our sell side actually. And then this is, like I said, a really nice level down here. The daily sell side liquidity. So here I have this as our current immediate sell side liquidity. 15-minute fair value gap here, which we pulled into at the 9 o'clock hour. And then we have this higher one here. And each one of these, like this is going to be a minor buy side liquidity. But up here is where it's really smooth. Doesn't mean like maybe we'll trade up in there. Maybe we won't because we have that inversion, which I'd rather see it stay in the lower half. We have a new day opening gap right here, midnight open there. So if we do go up, I would like to see it stay like right in this area. It could wick up and take this buy side liquidity, but see what happens here. We have this 15-minute fair value gap. We've been trading in it. And let me tell you something about these fair value gaps. If you didn't watch that video on the algorithmic price delivery, so like this inversion is kind of holding it. Let me see if I can move it. No. Here, let me move this real quick. You see the 15-minute fair value gap here. When it trades into it like this, it's trading into it. When it does not completely trade through it all the way, that remaining portion is left inefficient. So you can expect price to return there at some point. Like that, just because it's trading into this fair value gap and goes away from it, doesn't invalidate this fair value gap anymore. Like it doesn't mean it doesn't mean it's through, it's done. It needs to trade all the way through it because the remaining portion is left inefficient. And especially in that video about algorithmic price delivery, he explains that like very well. And it's very good. Now you can drop to lower time frames and see if it trades through it. and where price closes. But any piece that's left remaining, it's still inefficient. Like here, we traded up. Now we closed in the midpoint. So good. But this is balanced. It traded up through it. So you can see that. And then it dropped. So here we didn't trade back up into this one. So that's still inefficient. And this one is slightly still inefficient. So it's possible we could trade back up in here. Then once it trades back up through it and it becomes completely rebalanced, then if there's a bearish underlying, if it's the market is showing characteristics of being bearish, the underlying move, then once it rebalances, then you can expect it to drop. So if I drop down time frames to like the 1 minute or 5 minute, even maybe in this one, you would see price candle bars closing above the midpoint of it. And then you can see how the 15-minute closed here and dropped. So this is balanced now. But this down here has remained inefficient. This is inefficient. So we could see price come back up. And this is a daily inversion. So it could wick all the way up here on the daily and come back down and close below. So that could happen. So you can't hold too much value into this daily inversion because we're trading such a small time frame, right? So I could see it taking this buy side liquidity, rebalance this 15-minute fair value gap, and then even into this higher one. And then overall through the day, eventually come down and take this daily sell side liquidity here. So just a quick nugget on that. J Rob, good morning. Welcome. First time here. So this is kind of how I do it, J Rob. I hop on. I don't trade typically until about 9:50, but I already have my charts marked out, my analysis together. And then when I hop on, I kind of go through my thinking. I go top down. This is what I'm looking at. This is my framework. And this is kind of what I'm looking for the day, for the morning. And if I get it, if it works out, great. If not, then I may not get nothing. So let's drop down now to the 1 minute. Let's see. We have 9:30. This is going to be our first presented fair value gap if we get it. And you see how we took this little sell side, the immediate sell side liquidity right here. Now I want to see these 15-minute fair value gaps. I'm actually going to get rid of this inversion and just take a mental note of where it is. The inversion is because we have these two 15-minute fair value gaps, and that's good enough for me to kind of remember where this inversion is. It's just I don't like it clogging up here. So I want to see, do we trade through this 15-minute fair value gap here, which I think we will. And then we have this one higher, and then we have all the buy side liquidity in that area up here. All right. So what we could be setting up for, like I said, if we push up here, I will let price draw to this area. This down here, this sell side liquidity from the daily chart, 242.75, is going to be a stronger draw overall on the day, in my opinion. So when you have both sides, a buy side, a very strong buy side, a reason to go higher, and a reason to go lower, you wait for it to take one side and then look for a trade to the other. So this is going to be our first presented fair value gap. And now, we don't have any news today. Trump speaks tonight, so it should be fine. We should be good. Now I'm saying, like, this could be an entry for somebody right here. The first presented fair value gap. We traded, rebalanced this 15-minute fair value gap. But at the same time, this is why you wait for one side to go or the other. Even though I believe we are going to get up here to this area, at least to this 525 area. Especially we've been trading below the midnight open, right? So if we have an open, then we could have a low and then a high and then a close. That's possible too. Look, let's go back to the daily chart. Because we've only had this one up close candle in 1, 2, 3, 4, 5, 6, 7, 8. Out of 8 days, one up close candle. I mean, but like I said, it traded. This is balanced now. Up here is not. It's inefficient. So just wait and see. But I'm still, got to be bearish overall. So we'll see right here if we build up some support. Well, I was going to say, I still think we're going to go up, but like I said, right here, I got to wait to see which side does it take first. Which side? Because remember, if you're looking at the power of 3, you're going to have manipulation or accumulation, manipulation, then distribution. So you don't want to get caught in the manipulation. You always have to expect manipulation. So here, okay, let's take a look at this. From 9 o'clock, we came down now. We took this intermediate sell side liquidity right here. Now what do? We just ran up and took this minor buy side right here, this high. Okay, so it could be clearing out. Buy stops and sell stops. So that's typically what manipulation is. You have an accumulation, and the manipulation is to clear the runway for the distribution. That's how it's supposed to work. So, man, we're starting off a little hot this morning. Some great points to be able to speak of. So, like when I'm streaming, if there's nothing happening in the market, I like there to be at least points of conversation, because at least, we're all learning something. And when I'm speaking of stuff like this, I mean, it helps me too. Even though I've learned some of this stuff, even like when I'm trading by myself, if I'm not live, these are things I'm all thinking of, thinking out loud, stuff like that, looking for. So, but then once you have that, you got it. Sorry, I was just checking some messages here. You gotta be patient. Be patient. But then again, that's why I love to frame things out. That's why I love to frame things out and just wait. You just wait. It's framed out. You have an idea. And then the other thing is, I'm sure some of y'all have heard me say before, if you don't have a clear picture when you frame things out by the open or after the open, if you don't have a clear picture yet, sometimes that does happen. The market is kind of weird or whatever. Then just wait. Wait for it to present you a clear picture and say, okay, now it's framing out. Now it's framing out. This makes sense. Wait for that. And if that never happens, then you don't take a trade. You don't take a trade. Like, it's almost, if you can create these little check boxes of if this, then that. And then like stay true to it and hold on to that, then it does take a lot of emotion out of trading. I will never say you become emotionless. We're human. That's hard. But as much as humanly possible, I guess. All right, so look at this. We inverted this first presented fair value gap. And look how we created this new one and immediately inverted it. And we didn't come down as low as this low. I'll be watching, but this is signs of engineering more sell side liquidity here and first running buy side liquidity and coming back down to this later. That's what I'm looking at right now. It's kind of giving me that footprint of, hey, we're going to bring it right back down here. We're going to engineer some more sell side liquidity because we're going to go through this later, through this daily sell side at 242.75. And we immediately inverted this here. So if we get back above the first presented fair value gap, then I'll believe we're going to run it up through buy side. So I'm not under that impression just yet. I want to see, does this act as an inversion, or are we going to keep, is it going to reclaim it, or are we going to keep laying new fair value gaps, keep inverting it? Like, what are we doing? And that's also why I don't trade until about 9:50 to 10 o'clock, because I want to see what the market's presenting. Is it going to be a high resistance liquidity condition? Is it going to be seek and destroy day? Like, what is it going to do? And that's why sometimes if a move happens at 9:40, I don't care. I'm okay with that. I'm okay with that. If it runs and goes, that just means, hey, that might not be the day that I get a trade. Maybe it will, maybe it won't. Yeah, if y'all can hit that like button, I definitely appreciate it. If y'all get something out of it, just hit that like button. It helps support the channel, and it's free. It acted as an inversion. See how we stayed in the upper half right here? Upper half pushing right through first presented fair value gap. Now it's giving me, that's what I was saying, it's giving me the footprint, the signal. I don't know if footprint aligns with what I'm saying here. It just sounds good. It's giving me the signal that we're probably going to go ahead and push up through buy side. Nice, David. Yeah, and that's just my personal rules. As y'all know, if y'all have been studying ICT, if you get an entry, there are entries right after the open at 9:35, 9:40. There's entries. That's up to you. You can take it. You know, if you have it all framed out, you have your bias, you have your money management, all that, perfect. Like, that's the thing that I love about ICT concepts is there's really no wrong way to trade it. As long as you formulate your own plan around it, your money management around it, and stick to it, have the discipline to stick to it, it's all good. It's all good. And everybody sees things a little different, right? I might see fair value gaps and breakers or order blocks really well. Somebody else might see, you know, mitigation breakers or something else better, and whatever. I'm never going to be the person to say this is one way or the highway. This way, and that's it. Even non-ICT concepts, regular, any trading, VWAP, whatever, like those can work too. I don't believe they give you as much insight, but as long as you are disciplined to stick to a money management plan and you have some type of strategy that gives you an edge, whatever it is, you can be a profitable trader. All right, so we do have this fair value gap inside the first presented as well. Now, here's the thing. Oops. Here's the thing. Do you want to go ahead and trade along up through buy side, or wait for it to draw and look for a short? That's the tempting question. For me, I wait, because the number one thing I need in my trade is a draw on liquidity. I need a clear, obvious draw on liquidity. And then I need a market structure shift, a fair value gap, along with one other PD array, which is an inversion, breaker block, order block, something. I need 2 PD arrays to confirm that shift. And then have a clear target on the other side. That's what it boils down to for me. There you go, Will. Yeah. Like, see, if you, all right, phone. I have I guess Google Assistant on my phone popped up and started listening to what I was saying. Yeah, Will, draw on liquidity. To me, that's number one for me. Because see, I can think it's going to go up here all I want, but it could run this first, sell side. So had I gone long right here, I'd be in trouble. I'd be in trouble. David said, yeah, I don't know how people can even trade something else. I couldn't even think of myself trading some, I don't know, support resistance, trend lines. Yeah. Once you know, so here's a saying I used to say whenever I used to teach like finance and stuff to people and like investing and stuff. I would always say, I don't want to ever tell people, and this is what's carried on to my trading, because I don't want to tell anybody what to do or how to do it, right? I want to provide information, because when you provide people information, it gets people thinking. And when people start thinking, they can make an informative decision for themselves, right? But what I used to always say is, once you know, you can never go back to not knowing. Think about it. Once you know, you can never go back to not knowing. Obviously, you can forget things. I'm not talking about that. But if I provide somebody and open somebody's eyes to new information, it's like, okay, and then you know that it's true, or you see it working, you can't go back to not knowing. That gives you an informative decision on whatever may have been the other side to it. So once you've seen ICT concepts and you see it working, you can't go back to, well, maybe it doesn't work, or, whatever. So you can trade, you can change your strategy, but then you have to live with, what do I do from there? Yeah, Chris, that was creepy. It popped up and it was the Gemini assistant. I don't even know how that, I didn't even think I had that on my phone. Let me see. Do I have the Gemini app or something? Did I ever download that? It was Gemini. I have no idea. I don't have the app. Hey, Google. Ah, I see what it is. Gemini replaced Google Assistant. So when I say, hey, Google, it pops up. Okay, stop it. You have Siri. Well, this Google Assistant now switched to Gemini. Yeah, the world of AI. I mean, I'm just waiting for iPhone, Chris, to catch up with the technology. Then I might consider switching. Man. All right, yeah, you see how we're playing in this area? See, and this is internal range liquidity. It reached up into this internal range liquidity. We may see it take sell side first and then head up to that buy side liquidity. And like I always say, if we take sell side and we just keep drawing down, well, then I will scratch the idea of it running a buy side during my trading session, and I'll just look for a pullback to a 15-minute fair value gap. I try to keep the rules simple. Now, one thing I did forget to mark, because I started talking too much, is the opening range gap. So I forgot that. So we have our close, and then we have our opening range gap. All right, let's see how large of a gap that is. 503 to 342. Okay, that changes some things. We have more than 120 point opening range gap. So what's the rule? That it is likely to not close that gap that morning. So it could trade to the lower, because this is this gap opened lower. It could trade to the lower portion or up to the midpoint. And as we can see, it traded up to the midpoint right here. So I'm slacking, because had I saw that, that could have helped my analysis a bit to not think we're going to run up, which also would help this right here where I said this could be an entry to go long. Had I seen that, I would have never considered. I mean, I already knew I wasn't going to take that. But I would have never even thought 0.1 second of taking a long through here. So let's see if this acts as an inversion. Look at this sell side liquidity. Look at this sell. Here, let me get rid of this one. We've already traded through this one way too many times. This is, see, now whenever you trade, like here, this one, we inverted it. It used it, reclaimed it, inverting. Like once it does that so many times, then that fair value gap is done. The daily, here, let me show you in a second here, Will. But see, look, we reached up. We do have a fair value gap overlapping there. This actually would have been a great short right here. This is the short to take because I missed the opening range gap there. If I had that opening range gap, we're not going to trade higher anymore. I don't believe. We engineered so much sell side liquidity. We have this daily sell side liquidity here. This right here was the entry to go short, in my opinion. And I probably missed it. It's 9.56, so that would have been a good entry right there. We're still not really in great distribution right now. It's kind of showing some high resistance for the moment, but I don't see us going back up above this fair value gap, this area right here. Like this is a good short to at least take it through this sell side right here. In my opinion, we are in this little bit of a ugliness here, but reading this, I don't think we come back above. This wick, the wick acts like a fair value gap. So this wick right here, you'd want to watch the midpoint of it. Look at it, the midpoint of it right there. And we should see it displaced down now. And see where it's getting hung up on right now is this little fair value gap right here. But it shouldn't. Really think we're at previous day low. I really think we're going to displace down. This was the entry for me right here. Even though it looks ugly, if you're reading with the framework's there. But there's room. I mean, like, I don't have to have this entry. It's not even 10 o'clock yet. So now if it comes back up to it, I'm not going to just hop in. But there's so much nice sell side liquidity here. It's traded nicely to the long side. Where if it does come back in this area, I'll see if it holds resistance first. Because it still hasn't taken this low or buy side up there. So it could still go all the way up there. You just got to be careful. So if we build resistance in here, then I could potentially look to short. But yeah, here, let me go to the daily chart and show you that. Right here is where that daily sell side liquidity came from. This smoothness right here. Very smooth, relatively equal lows. So that's where I marked it right here. Just mark this low. And you can see how price continues. It gets so close to it and goes away. Closer and goes away. Engineering so much sell side liquidity that when we do get through it, I mean, we're just going to rip right through it. You just can't get caught in manipulation. That's the only thing. See? Here we go. Man, this was the entry right there, but... And you see how the midpoint of this wick, right here, holding right there. And then that's where you should see the distribution. If we don't go this time, I mean, look how much sell side liquidity it's engineering here. But it should just rip right through and run. And unfortunately, I missed it. There we go. Dang. I missed this right here. I just missed it. See, from this entry, 346. I mean, look at that. Look how many hundreds of points we ripped. Man. I don't know how I missed it. And that's what I'm talking about. Like, you can look at this and say how messy it is and say, oh, this looks messy. But if you have the framework and you're reading within this stuff here, like it to me, it became extremely obvious. It became super obvious right here with this wick where we reached up. Because what the problem was, I didn't notice this fair value gap. I saw the inversion and I didn't notice the fair value gap overlapping it. So we wicked up here, came down, closed. And then when you measure this wick and you see price respecting the midpoint of it right here, you know it's only a matter of time. Within the next few minutes, it's going to displace through. And that's what happened. So it's awesome because it's almost like you're seeing the future. And that's again why once you know, you can't go back to not knowing. Like, I can never not trade ICT concepts because I know this is how the market, the algorithm in the market works. I don't care what nobody says. But that's the move I wanted right there. But now that we're running through sell side liquidity, I will look for price to go up through buy side. Doesn't mean it will, but I'll look to see if maybe an opportunity happens. There's still reason for it to go down further. Like I said, we still have this one down here, 1975. And if we never get a move up or we never have a pullback, I mean, we'll eventually get a pullback to a 15-minute fair value gap. But the question is always, will it happen during my trading session? If it does, great. If not, then, hey, I missed the move. I mean, that was just beautiful. $164 points on that rip down. Obviously, I wouldn't have put my stop way down there. I would have targeted this daily sell side liquidity, but that's still 108 points. 105. Oof, that would have been a trade. So now you got to wait and see, where do we draw to? Let's go to the higher time frames. We're not going to show anything on the higher time frames unless you go way back. So I got to look at the daily chart. We have this lower one here that we may rip to. So we just wait and see, where does price stop at this point? Do we get an inversion? Do we get a 15-minute fair value gap? A 5-minute? We're about to get a 5-minute maybe right here. And then I'm just looking for the fair value gaps at this point to invert. Dang, and that happens. Like, you got to stay disciplined, though. That was the move. I wanted it. But I didn't see this 1-minute fair value gap, and I was still waiting for, because remember what I said, you typically, the rule for the model I'm trading is you wait for it to take one side and then go to the other. So here did not take the other side, but because I didn't measure out that opening range gap, I messed up and forgot. I did not see that it was over 120 points, and we already traded through the middle and the lower quadrant of it. Because here's the low of it, the lower quadrant, the middle. And it's over 120 points. So once it did this up here, it is likely to not come back. Then I could have said, that would have shifted my thinking to taken one side than the other. Then I could have said, oh, well, we're going to, because of this up here, this opening range gap, then we had this, we're going to go down first. That's how it gave me the signal that first we're going to take sell side liquidity. Then we might come back up here. Maybe. It's not a guarantee. Probably at some point during my trading session. I don't know. We'll just have to wait and see. But you see how it's like building up right here? It's not coming right back up. It's maybe going to look for a second distribution down through this sell side liquidity. Because if this was just a sweep, it wouldn't be spending a lot of time below it like this. But hey, once you miss a move, you can't dwell on it and sit there and say, oh, I would have made this, or I would have done that, woulda. You can't do that because then triggers an emotional response. You gotta be okay with it. Next play. All right, we wait. We got that 5-minute fair value gap. So I'm going to mark it. Because if we do invert this fair value gap, which is it gapped through sell side liquidity here, if we do come back up and invert it, then that would be my first signal of, hey, we might make a move up. But if we just run away from it or come back to touch it and keep going down, I would be eyeing this 019. Yeah, we're 200 points away from it, but y'all know NQ. And I've over the last year and a half of trading ICT concepts, there's been so many times where I've eyed a level. I'm like, no, that's like 300, 400 points away. It's not going to get there today. It'll get there, but not today. Well, then guess what? It gets there today. So nothing's out of the equation for me. So if we're going to look for a second distribution, then we have to have some accumulation first. And if we have accumulation first, I want it to be below all this sell side liquidity. Accumulating, then a second distribution. Yeah, I mean, it was a beautiful short. So if we get a second form distribution, we're just going to go down here to that 019. I'd be looking for a potential entry, even though this is not my reversal model. You have to, the framework and everything lining up is telling me that we're looking like we're probably just going to keep heading down to this 01975. We still don't have a 15-minute fair value gap. Well, that's a little bitty if this one closes down. So I know I say like on a 1 minute, if it's like a couple point fair value gap, I don't hold too much weight to it. But on the 15-minute, I will hold a little more weight to it. 58.50. So this is like 2 points. I'll hold a little, because also we have that 5-minute. I'll hold a little more weight to this than a 2-point fair value gap on a 1 minute chart. So we have this fair value gap right here. 09 to 50. And we took the low. So this could potentially be an area. And this is looking like a order block right there. reached up. See, that's a little fair value gap, but it looks like that's probably going to be an order block. It is an order block, actually, right here. A bearish order block. So and then all these wicks up into this big fair value gap here. At some point, it's likely to trade back here, though, because you have that 5-minute fair value gap. And typically, that after that much of a run down, you're not going to have breakaway gaps in the middle. So I wouldn't really rely on this to hold resistance here, to be honest. And the thing is, if I took an entry here, I would have to have my stop way up here. 60 points. Because at this point, it's 10:11 a.m. I'm not seeing any reason for price to need to trade back up here. It delivered very well to the long side. So I think we'll make our way. I think we'll continue making our way down, and we may be looking for the 15-minute to start forming a fair value gap. All right, so here's that spot. See? It could trade up to here. This is the area where I may look to short, potentially. Maybe. But you got to wait, because if we do come right back up into that range where that liquidity was, sell side liquidity was at, then you just got to be careful. But I would look for resistance right here around this 060 area. Unless if we really can't get above here. We did invert this. See if it acts as an inversion or not. Because remember, price could stop anywhere between here and make a pullback or a potential run to buy side. Even though I don't have that. Oh, man, it didn't copy. Even though I don't really have that much of a conviction that it's going to go up there, you can't just rule everything out. Yeah, that's tough. So let's see if we get this overlapping fair value gap here. That would be our first signal of a market structure shift. We have low, high, lower, low. It might be taking a high, so this may be a breaker. If we can make a high. If we could take this high here, these highs, and get rid of that because it's too much going on. So let's see if this holds as support. It's not an entry for me, but let's see if it holds as support. And the reason why it's not an entry, because I'm bearish overall. There's reason to move further down, and price delivered well to the upside, to the long side. So that's why I can't just long this right now, because it could hold here and stop right here, or it could just invert this completely and continue down. Now, that is, if this does invert and displace lower with a fair value gap, that's where I would be looking for an entry to go short. Otherwise, I want to wait and see what happens right at around this 060 area. Uh-oh. Information is coming out. I don't know, I'm getting red Trump headlines. I don't know if he's speaking. It doesn't say anything about that, but if companies move to the United States, there are no tariffs. Okay. But where did that come from? That was just at 10:15, so uh-oh. That's why Financial Juice is my best friend these days. All right, so look, we are inverting this potentially in the next few seconds, and we may be displacing lower. If we get a fair value gap in here and we come back to it, I'll be shorting. And then that way my stop could be right up here at this high. And we shouldn't come back up there. Pretty big stop, though. Yeah. You woke up and said, let's rattle the world a little bit with some tweets. Yeah, I don't know where that information is coming from. All right, here we go. Got 20 seconds. We're likely to get this. And see, we never took these little highs right here. If we come up into this area, I'll short and have my stop above the swing high. And hopefully we rip down. Because see, now we're trying to set up this 15-minute fair value gap. I don't want it. I want to see it pull up. I don't want to really see this little fair value gap here. Yeah, I mentioned that, Chris. Mentioned that earlier. All right. I didn't want to see this little fair value gap form. So I do want to see it wick up into this area. I know, Chris. I mentioned that one above. The one I did not draw, the small one. Earlier, I mentioned that one. Displacing lower. Man, I might miss this all the way around. If it does not, I mean, this thing is... But see, I couldn't take a short in this one here. I couldn't take a short in this one because see how we reached back up? I want to see if we're going to reach up in this 060 area. And that's where I was looking to see if it, that's when we had that new fair value gap. There, I couldn't take this short because we didn't invert that one yet. But now, I mean, we're just displacing low. Here's that accumulation, second form distribution happening. Man, this might just rip through, and I might have just... Again, this was the entry here, up here. I'm now just looking for an entry that I can get, but my model, what I would have been really looking for was this one up here. Unfortunately, missed it. So, I'm just looking to see if something else could possibly happen. Yeah, you missed it, Chris. You missed that. Yeah, because I talked about... I had a whole spiel on that about how the small... fair value gaps that are only a few points on the 15-minute, I hold a little more weight to that. But if there was a small one of a couple points on a 1 minute, I don't really hold weight to that at all. So yeah, you missed that whole conversation, buddy. All right, we got this one, but I can't take this one. We're in this little fair value gap. I can't take it. The reason why, if I try to short from here, I mean, look how big of a stop loss I'd have to have. I have to wait for it to pull back to this one if it does. If it doesn't, so if you look at this leg here, you have this high, this low. Let's see. Here we go. Then you have the 50% of it here, depending on where it pulls, if it pulls back, 50% here. And then this area, like the 70% of this leg here. That's where I'd be looking to short of this leg. Like I can't short right here because if it stops here, it's likely, like it might just reach in here and keep going down, but I can't. That's just too big of a stop loss. From here, I could put my stop up here, but, and it never reached back up into this area either. Yeah, I don't really look at those. Like you have this low. I look at the obvious lows where you have liquidity at, where there's like relatively equal lows or an extreme pullback. So like here, you pulled all the way back here. And then you had these lows here for liquidity. This one, I wouldn't really, yeah, there'd be some minor sell side liquidity there, but I wouldn't really look at that as anything. This I do, and then lower. And we very well could wait another 7 minutes until 10:30 for price to pull back up here. And the reason I say that is because that's when we'd get this fair value gap. And then that's when it could pull back up to this area and then keep going. Unless if it just keeps ripping lower, but and this is the day, these are the days where you do have to be disciplined. Because if you miss any of the moves, the market's moving and the market's beautiful today. I just missed the move. I missed my entry. So these are the days where if you miss an entry, or if anybody misses an entry, then you get caught chasing price or doing things because it's like, oh, the market's moving, let me get a trade. And that's when you can really spiral out of control and mess yourself up. So the days you miss, if you miss a trade and the market's moving, you're like, oh, I got to get a piece of this. Sometimes it might be better. There's always tomorrow. Always tomorrow. There's always another trading day. No matter what. No matter how good the market looks on that day, there's always going to be another day. Yeah. I mean, I missed it. And part of it was me forgetting doing that opening range gap. So it happens. And that's why I like live streaming also. Because when you see just posts on X or wherever, you never get the full picture of people. You know, some people only post their winning P&Ls, but they don't post their losing ones. So like live streaming, you see everything. You see everything. Man, that sucks, Max. But see, right there, that's where you got to have the discipline. Right there. Those things. If you thought you were in this move, oh, I tried to get in. I thought I was in. Maybe my sim account took it and my PAs didn't take it or whatever. Man, you just cannot. At that point, it might be better just to walk away for that day. Like if I had taken this and like, let's say it only copied one account or whatever. Oh man, I want to get the other. Yeah, nope. Just got to walk away. Got to walk away. Yeah, there's going to be another day. Live to fight another day. Now, at this point, we're like, where's this low right here? Roughly 076, 019. There's no doubt in my mind that we're not going to get through this low. The question is always when. When. It's holding resistance here. But look at this wick. So let me, a little insight here. holding resistance. So this is looking good. But then you reached up, closed down. So before that, you reached down and closed up. And then this candle, you reached up and closed down below it. So currently, if you're looking candle by candle, there's a little bit of, there's a fight going on. You can see it. There's a fight right here. Bulls reaching down, closing up. Right here, the bears reaching up, closing down. So there's a little, you can see there's a fight going on right here at this area. So I'll be watching the midpoint of this wick now. I'll be watching right there. Does price continue to trade in the upper half of this wick? If so, then we're likely, and we keep getting up close bars, we're likely to reach up here. However, look at the midpoint of this fair value gap. We cannot close above the midpoint of that. And that's where you see a fights happening right now. And then that second distribution might not even come until the 1050 macro. Just depends. Like we may come up here, take our time, get up this area, maybe even test this 5-minute gap up here that I mentioned. And by then, maybe even reach up for that 15-minute one that I said is forming right up here. And then 1050 displace back down through this one. You see that? We could never get back below the mean threshold, middle of this wick. Bulls are in control for the moment. They're winning this fight. However, it very well could be manipulation up, clear it out. Right here, I'd be watching this area right here for a potential short. But you got to be careful when it's coming up this strong, though. You don't want it to just rip up through and get to this area, because I still have this area up here. It's point of interest here. Oh, there's a 5-minute. I missed this one. There's a 5-minute fair value gap right here as well. That we look like there's a minute left, so it may or may not invert this 5-minute gap. We'll see if it reaches right into here. And we have a new fair value gap right here. It could want to hit this area and drop so it doesn't invert that fair value gap on the 5-minute. But we'll see. I might get ready to short this. See how we're coming back down into this 5-minute fair value gap? I'll be curious to see, like, it's balanced now. It's efficient. And if it closes on the 5-minute inside of it here, then we may be getting ready to invert this one and go lower. Maybe, but it's not closed yet. Got a few seconds. Yep. We closed inside of it. So now we may be getting ready to invert this and come down. All right, so I'm going to... Oh, not yet. reach down to this one. That's an inversion. Look how it touched it. If it inverts this one, I might be looking to short. Okay, we're inside there. Let's see what happens here. I don't like that we traded through this 5-minute one, though, at the moment. We haven't inverted it, but that might be it. We may be looking to come up higher. And we have so much clean buy-side liquidity as well. Got to be careful. See, here's that 15-minute fair value gap we just reached up to. Let's see how that plays out. I like this area for a short, but just got to be careful. Higher time frame is going to be stronger, so that 15-minute fair value gap should hold this area, but it's not looking like it really wants to come down right now. So if it inverts this 15-minute fair value gap, then we may be making a run for the buy side. So right here, very key area to see if we could trade above. We'll see if it rebalances this. But if we make our way up higher, then we could be looking to go through buy side liquidity. But we'll see right here, very key area. All right, we traded through it. Let's see what happens. Do we go rocket up or do we displace further down? That inversion nicely right there. Frustrating? What's frustrating? You said frustrating. Don't tell me you took a loss, Chris. Did you short this? Okay. All right. Sorry, man. Yeah, it happens. Just as long as you stay within your money management, that's most important. The money management allows for mistakes. Just keep that in mind. So you see we're building up some support here. And this is still a key area. So, yeah. We'll see. Only way I'd be looking to short now is if we have just like obvious, clear displacement lower. Otherwise, we may be trying to make our way up to the buy side. So because of that, it's going to be probably a little while, and it's past my 10:30 time. As y'all know, I'm here till 10:30ish. So I'm going to shut it down. Yeah, that's the right thing to do, Chris. If you feel anybody like you're gonna like, you know the feeling. You should know the feeling by now. Whatever that is, just like, you know what? It's hard. It's easier said than done. But at that point, you just gotta say, all right, let me close it down. So, all right, y'all. I am going to hop off. It's that time for me, and I think it could take a little bit while longer before anything shapes up. So, unfortunately, this was the move for my framework right here. 9:55. Missed it. It happens. Yeah, so I actually just so happened to have my charts running yesterday. My model will allow me to trade up to 11 a.m. But if I don't see anything shaping up around 10:30, 10:40, then I'll hop off the stream. And I'll just kind of leave it at that. And most days I won't take any trades. I'll have a chart running while I'm doing some other stuff. And maybe I'll get in an entry between 10:30 to really about 10:45, 10:50. But like 9 out of 10 times there won't be anything for me. It's just yesterday I just saw it and liked it a lot. So that's kind of the, I guess, logic behind that. So because I would stay until like 10:45, 10:50. But if I really don't see anything between 10:30 to 10:40, like I said, there's like a 9 out of 10 chance that I'm not going to take a trade. So I just spare the minutes and work on a couple things I got to do and then go about my day. So, all right, y'all, I'm going to hop off now and I will be back tomorrow. So it's the way it goes sometimes. But all good. I hope y'all have a great rest of your day. And as always, trade well. See y'all tomorrow. Yeah.